doing technical analysis. Number one, every month out in the futures, the difference between futures and spot, there's always a price difference, and it's called the basis, because you're going to have what's called a carry charge, and every product has a carry charge. But with the Forex, it's a continual marketplace, so you don't have that rollover. You're trading in the actual spot market, so you don't have to figure out your technical analysis. You're not going to have those gaps in the chart. We go into detail in your manual, so please refer to your manual on this rollover point. Now, day trading mini lots, in my opinion, is a little bit more advantageous for the smaller retail or individual investor like yourself, especially through Forex. Number one, you can scale into multiple positions, and as the market starts to prove you're on the right side of the track, you can adjust your stops, your risk management. You can scale out by taking some off the table and letting the balance of your position ride. So by trading mini lots, it's a little bit more advantageous for individual investors, especially as not everyone's going to be as wealthy as J. Paul Getty or, in fact, as Warren Buffett. So in trading in the markets, such as with the Chicago Mercantile Exchange, I think the futures contract, they do have mini-size contracts, but these mini-size contracts are just way too, they're not as liquid in the marketplace. There's not enough bids and asks. The spreads are too wide, and it's something that if you're going to be trading, you want to know that if I can get into a product, boy, can I get out of the product? So I think that trading anything less than $100,000 size Forex lots, if that's what you're trading, if you're trading less than 100,000 lot size, then you need to be with Forex. If you're trading like a hedge fund where you're trading millions of dollars every day, and you're trading maybe 10, 20, or 100 lot of the 100,000 lot, you may want to consider a futures position, because with the CME, with the futures contracts, especially during U.S. trading sessions, number one, think of this. The contract is a bigger size. It's 25% bigger. It's actually, instead of 100,000 lot standard size, it's 125,000. So you get a little bit more bang for your buck trading on futures. But that's someone that would be a hedge fund trader who's trading millions of dollars. But if you do that, remember, you're going to have to make up for that rollover period. You're going to have gaps in your chart analysis as you go from one continual month, let's say from March to June, from June to Sep. There's going to be that basis difference, and you're going to have to recalculate your price differences. So you need to identify yourself as a trader. And if you're a day trader, even a swing trader or a position trader, how big of an investor will you be? Those are the kind of questions that are going to help you decide which trading vehicle to use. For most retail individual traders, you're a day trader, number one, you're trading smaller lot sizes, then you need to stick with Forex markets. Now, since Forex does offer ultra mini size accounts that still offers leverage, the greatest thing there is that you can actually put money on the line, not be at severe risk. You, again, won't make a whole lot of money when you're right with these ultra mini size accounts, but here's one thing that has an advantage. You can test any type of trading system and see how you as an individual react to the marketplace with real money on the line. And being able to test and check your emotions while you're trading and checking out a system, that's the true benefit. Getting into the right habits, getting drilled with the right habits. If the system or if your signals are set up, say, to get in, you get in without hesitation. And possibly getting into that type of mindset and that frame of structure is something that these Forex ultra mini size accounts may help you with. So that is one consideration of when and where you may want to try these ultra mini size accounts. Most Forex companies, by gosh, they offer free real-time news, real-time charts and quotes with state-of-the-art order entry platforms, and even some have automated order entry features such as the one cancels the other and a trailing stop feature. So you have everything at your disposal without any of the added additional costs that futures traders have to deal with. In futures trading, you have to pay exchange fees. You're going to have to pay for quotes separate. You don't get a free quote machine every time you're trading a futures position. So that's an additional cost to a